Hi there, welcome to Kneppy Invest, and welcome to the final trading day of the week. About 27 minutes left of trading today, and I'm just seeing if there's been a bit of a rally. No, complete opposite to yesterday, where we did have an intraday rally. Today's been the other way. We did have a little bit of rally early in the morning, and I think the reason we had a little bit of a rally just after opening is because people remembered what happened yesterday, that the market did rally, and I thought, oh, the market's down, I can start buying, and that didn't last very long, and we have been dropping ever since then. And it's been an absolutely horrible day on the ASX, to be expected because of what happened on Wall Street overnight. Nasdaq had their worst day since COVID-19. I believe, down about 5 to 6% or something like that. So not a good day on Wall Street, all in reaction to Trump's tariffs, which I will talk about in today's video. Now, the agenda of today's video, I'll go through everything else I usually do in these ASX Daily Rundown videos. ASX Today, top 5 stocks. I'll have a look at some of your comments, and some of these comments I'll have a look at during the video. There are also 4 other things I want to talk about, including I went live this morning, impromptu, wasn't planned, and I thought, oh, the market's opening soon. Let's see if I can go live. And I wouldn't say it was a disaster, but I haven't deleted that video, so you can actually have a look at it. But I just wanted to test it out, and I'm surprised I don't have a testing facility or something like that. Anyway, so I'll talk about why I went live and my plans moving forward, with possibility of more live videos in the future. Also talk about donations. If you want to donate to my page, you can do that now. Also talk about a Talking Wealth video I watched last night. Also mentioned it in the video this morning, the live video. And then I'll also talk about tariff rates, how the Trump administration calculated tariff rates for every country. And this is proof that, in my opinion, this might be the most inept government administration in history. Well, I'm being a little bit overly dramatic, but we have proof now how they calculate tariffs for every country in the world. Weird, bizarre, mind-blowing. Oh, I just don't. I'm so dumbfounded that I can't even say the words. Anyway, so I'll talk about that also, and I'll do all that before we have a look at the ASX today. So let's do that now. First of all, we'll talk about my live video this morning. So if you go to, funny enough, when I went to channel content, it wasn't there. I was like, where is it? And they do have a live section here. So there it is. No thumbnail. First live session, NASDAQ worst day. I was surprised how many people joined in. So at one point, there were 30 people watching. That was I suppose, the highest point in the video. The best part of the video, I have no idea. 27 minutes long. So what I did and why I did this, I have been thinking about this for a while, and I am going away on vacation, going for a holiday, a hiking holiday, not to multi-day hikes. All these will be one-day hikes or single-day hikes, whatever you want to call it. So this will be for 2 months in September and October, ending in early November. And I thought I probably won't be able to do any videos. And then I was thinking there is a chance I could do live videos. So I thought, why not test a live video? So I've been thinking about this for about a month. And this morning I came to my computer, took the dogs for a walk, was doing other stuff. And then the time was about 8:40 Brisbane time. And I thought, why not? Instead of having a look at the announcements, why not do that as I'm recording live? So I considered this morning's live video as a test run, just to see how it works in YouTube. It's a little bit different than how I use Zoom. That's the platform I do use to do these live, not these live videos, these videos. So a little bit different, and it's going to take me time to get used to how they do it differently. So it was taking a bit of effort for me to navigate. There was one question or comment here. Where was it? Map0v0 says, Kneppy, you look worried. And Trader Hooper, absolutely correct. He's trying to work this stuff out face. So I think we all look worried when we are actually just focused and concentrating. Yeah, that was me just trying to figure out how everything worked. I am not worried about the markets at all. And I think that's very important. And the reason that's very important, or the reason I'm not worried, is I have a plan. I have plans. And it's amazing when you have plans and you're following those plans, how less stressed you are. It's absolutely true. So I have plans. No, it would be great if the market kept on going up. but I have plans, and I'm, following my plans to a T. Absolutely. And if the market starts turning up, my cash levels will start falling. At the moment, they're rising because I don't know how much further the market has to fall. So I'm not worried at all because I'm following a plan. And yeah, no stress, no worry. When I sleep at night, perfect sleep. I have no trouble sleeping. The only time I will have trouble sleeping in the next, say, 6 months is the few nights before I fly overseas. And the reason I know that's going to happen because it always happens. So I do have trouble sleeping when I'm really excited. So before marathons, I have trouble sleeping. I'm not sure if that's because I'm really excited, but it's before marathons and before I go away on a big trip. That's the only time I have trouble sleeping. And I think one of the reasons behind that is because I have very little stress in my life. I try to keep the stress as low as possible. It's very healthy. That's probably the main thing. It's very healthy. And it really helps you sleep when you don't have stress. I understand a lot of people that you can't make it work because a lot of people automatically have financial stress. I understand that. So that in itself can lead to people having trouble sleeping, insomnia, that sort of thing. So I might look worried, but I'm not worried because I'm stressed or worried. It's because I'm trying to figure something out. And that does frustrate me. So that's the only thing that causes me stress is when I get frustrated about something. And usually that lasts about 3 seconds at most. Anyway, so that's my plans about live. Oh, by the way, I'll probably test out my morning live videos again next week. I can't exactly say which days I'll do it on, but because the market now opens at 10 a.m. in Brisbane because daylight saving is coming to an end, that makes it easier for me because usually I'm out of the house for about 2 or 3 hours every morning. I come back to the house and I go straight to the computer, look at what's happening on the market, that sort of thing, the announcements, and I've got 1 extra hour from next week. I'm pretty sure daylight saving ends this Sunday. So that's my plans, more live videos. And one of the reasons I'm doing this is because hopefully when I'm overseas, I'll be able to do live videos on the fly. So I'll probably have to buy a laptop. I'm not sure if I can do it on an iPad. I don't have a laptop, but I do have an iPad. So I'm hoping either I can do it on an iPad, which I probably should test, and either I'll have to buy a laptop. Anyway, that's my plans. But I won't be able to do that every day in America. I think I've already said that. Okay, so that's my live video and plans. Second of all, I have set up a Ko-fi donations page. So if you want to donate any money to me, you can if you want it. No obligations at all. Now, when I first started this video, by the way, in my video yesterday, I put a link in. Here it is, buy me hot chocolate at Ko-fi. There's a link there. Hopefully that works. If it doesn't, just send me a message. So originally when I started this video, it was not about making money or what do you call it, side money or whatever that. This was just to help me become more comfortable in front of a camera. And because that was something I was doing at work, my professional job, I was in front of cameras. In fact, from about 2010 through to 2020, I was on TV a fair bit, like the news, that sort of thing. The news channels will come in, record me saying stuff, and I was so uncomfortable doing that. I was also on the radio. I was more comfortable doing radio. I hate putting myself in front of a camera, like a video camera or a normal camera. And the reason I started this channel was just to become more comfortable being in front of a camera and also to get used to my voice. So we all understand that our voices sound weird to ourselves, and it really works. I'm so used to my voice now, and I'm much more comfortable in front of a camera. However, at work, I'm no longer in front of a camera. I've shifted jobs, what I'm doing, and one of the reasons I shift jobs is because I didn't want to deal with people, just who I am. Anyway, so if you want to, you can give me some money, buy me hot chocolate, but no obligations, absolutely zero obligations. I don't want to, just if you want to, only if you want to. So there's that. And I thought, why not make a little bit of money? By the way, I don't think I've ever showed this before. So I make, just by ads, I make a fair bit of money. So this is per month and per day. So I'm roughly getting about $25 per day now, just in ads, YouTube ads. And that makes sense because financial YouTube ads are the most lucrative. So that's about $656 a month. So we are looking at, I'm also almost getting $10,000 a year. So that's a nice little added. That's another reason why I can go part-time at work. But the plan eventually would be to retire and just do this sort of thing and get a little bit more income in. Because even though money is not the be-all, end-all, it's always good to have a little bit of money, extra money. Anyway, so that's donations. Talking wealth. Actually, before I do talking wealth, time for a break. I've always been wanting to do this. Now I'm going to do it. So if you want to grab a coffee or a cake, or if you want to shoot some bullets at a target, not a real target, to let off some steam, do that. Do that now as I, have a small break. Okay, I am back. I've always wanted to do that. Put in targeted ads for you to do whatever you want. So you can actually do something through those ads. Anyway, so I want to do that every maybe 10 minutes. And I just remembered I want to do that. I've been wanting to do this for about 3 or 4 months, and I always forget. Anyway, let's go to this interesting video from Wealth Within. Why is the timer going off? I did not set an alarm. So I saw this video. I don't really watch Wealth Within videos all that often, but on occasion I will. And Dale, what's his name? Dale Gilliam, does have some really good thoughts. Sometimes he makes sense. But when I saw the title of this video, released yesterday afternoon, and we already knew yesterday afternoon the American futures were down huge. So it was going to be a really big bad day on the American markets. Why the US stock market won't crash on Trump's tariffs. And I was saying, hello. There was a few comments saying, have you looked at the futures? Anyway, so I've gone through 6 minutes of it so far. It's about 16-minute video. So I don't know what they say after 6 minutes and 34 seconds. Maybe they say something else. Now, some of the reasoning Dale had makes absolutely sense. So he's talking about a crash of 30% or more. And at this point in time, the NASDAQ is down 16%, Russell 2000 down 22%, S&P down 13%. So not really in crash territory just yet, but I do think it has potential. But Dale was saying, hey, but we haven't seen the signs of a crash. In the past, we've always had these signs. And I think he said exuberance. So some of the other signs is if you go for a taxi drive, the taxi driver or the Uber driver is talking about best stocks to buy, that sort of thing. The other thing is margin loans. So typically before a crash, you see a massive rise in margin loans. And the other thing was everyone's talking about a crash now. So their reasoning is, well, everyone's talking about a crash. It's not going to happen. But the problem is we have a lot of uncertainty in the market because of tariffs. So this is a little bit different just because of that uncertainty. And there is a possibility, and that possibility is now growing, that we're going to go into a recession. And if we do go into a recession, the market will tank even from here. Now, the reason I stopped it at this point is because whoever was talking, it wasn't Dale at this point. It was this guy here, was talking about the S&P 500, how we've seen the S&P 500 saw a rally in the first 3 trading days of the week. It bounced off the previous low. And he said, that's really bullish. That's really bullish. Unfortunately, that was not going to hold because of last night. And they should have known this. I'll be honest with you, they should have known this. And this is the S&P 500. And yeah, so they were talking about 5,500. It was holding. So this looked like a pretty good bounce or something like that. And last night, yeah, it fell through 5,500 on strength. So I'd love to hear their opinion, whether it's changed, because they're saying this is a great buying opportunity. But at this point in time, because of what's happening in the United States when it comes to tariffs and the uncertainty that is bringing and the increased possibility of recessions, even worse than recessions. And in fact, the Trump administration now is talking about recession. They're saying, well, maybe the recession is going to be good. Sort of like Paul Keating with the Banana Republic. I'm pretty sure he said something about, this was before I was, old. I'm pretty sure he said in 1990 or something like that, the recession we had to have. Did he say that? Recession we had to have. Paul Keating. Early 1990 recession, the recession we had to have, Treasurer Paul Keating. Okay. And I'll be honest with you, I'm not a big expert on Paul Keating, but I think he's maybe underappreciated. Maybe, I don't know. Anyway, so they're now sort of saying this recession we might have is good for United States. And to be honest with you, recessions can be good because what they do is they weed out all the weak companies and the strong companies survive. And so all the capital, if there wasn't a recession, all that capital that would be going to the weak companies is now going to strong companies. And in the end, it's only the strong survive. So recessions actually can be really good for economies. But the problem here is the amount of uncertainty. We don't know which companies are going to survive. In fact, right now, we are seeing companies in America announce firings and sackings because of the tariffs. Quite a few of those, I know at least 2, have announced massive sackings because of the tariffs and because of uncertainty. Consumers are pulling back on the spending because of uncertainty. Uncertainty is the root of all recessions. I'll say that. Maybe that's not true, but I just thought of that right then. Anyway, so the chart looks pretty horrible right now, S&P 500 chart, and last night was, yeah, a bad sign moving forward. We've got a new lower low. So they were saying there was no new lower low. The market was, looking like there was a bit of strength there. They also tend to focus on monthly and weekly charts. And so when they really focus on monthly charts, you're not going to see much yet. Yeah, I think if you go back further, yeah, so this is the monthly chart. And we're not seeing much weakness just yet because we're too early in the possible fall. And they're also saying that 10% correction is holding firm. Well, it's not holding firm anymore. So I'll be interested to see what they say in the last 10 minutes of that video. Okay, so that's talking wealth. But just because they had maybe a bit of a Barry with that video doesn't mean they're not worth watching on occasion. I do pull some good stuff out of there quite often. Now, maybe not quite often, but yeah, sometimes. Anyway, and also big fans of charts, which I am as well. Okay, on to tariffs and how the US administration, Trump administration, figured out the tariff rates for all these countries. Now, I'm just going to, there was a comment about this. Go to comments. Tariff. Oh, no, I've got to actually put it into the comment section. I was going to respond to it, and I thought, oh, no, I'll just do it in the video. Oh, no. Oh, now, medical investor, by the way, the market loves certainty. I think that is why the market may have rallied. We know what the tariffs are, but we're now gone the other way. There's a lot more uncertainty when it comes to tariffs, particularly now the White House is saying, well, the White House and Trump are being contradictory. So the White House is saying there's going to be no negotiations when it comes to tariffs, but Trump is saying the complete opposite. So even there, a lot of uncertainty. So we just don't know what's going to be happening moving forward. And we're also going to have retaliatory tariffs as well. And then what does Trump do? We just don't know. But the comment I wanted to discuss, if I can find it. Here it is from Vinhilip. Hi, Kneppy. Why can't USA put up tariffs when the rest of the world have up to 70% tariffs on USA goods into their country? That's not true. That's absolutely not true. So, and maybe the reason why you've said that is because you had a look at all the tariffs that USA put onto other countries. Here it is. And you're saying, well, it was okay. So Myanmar, Burma, has 88% tariffs on USA goods. That's not true. That is actually wrong. And in fact, if you have a look at this page, it shows you all the tariffs of the world for any other country, and they're very low. Tariffs right now are very low. For instance, Ireland, 2.7%, Germany, 2.7%, France, 2.7%, USA before now, 2.2%, Australia, 2.5%. India has 12% tariffs, so that is the highest of all these countries. This is MFN tariff rates, which are the baseline import duties a country applies equally to all WTO organization members. Now, some smaller countries might have bigger tariffs for some of the bigger countries, but I'm okay with that. And also, USA had free trade agreements with Canada, Mexico, and South Korea. So saying that there are countries out there with 70% tariffs on USA goods is actually not accurate. It's not absolutely true. And a lot of people without the knowledge would just assume that the number on the left-hand side here, so Madagascar has 93% tariffs on USA goods. Not true. Absolutely not true. And you'll notice that there's all these countries that have 10%. Like Australia had 10%. Our tariffs on American goods are very low, like 2%, if that, maybe even lower than that. I'll also say that there are some countries that have targeted tariffs, which I think is fine. Targeted tariffs are okay. Broad tariffs are not. Anyway, so this is the first time I saw how they figured out tariffs, and we have actually a US government site who, it's actually, see if I can find it. And I'll see if I can find it after I've mentioned this little comment from James Sirawicki, because he's the one who sort of, the first tweet that I saw who figured this out. And this is true. This is absolutely true. How the US Trump administration figured out tariffs for all countries has nothing to do with tariffs at all. Has to do with trade deficits and trade surpluses, which have nothing, zero to do with tariffs. Well, maybe not zero. Just figured out where these fake tariff rates come from, because they are fake. They didn't actually carrot tariff rates plus non-tariff barriers as they said they did. Because if you have a look at this, they said tariffs charged to the US, including currency manipulation and trade barriers. No, it's not true. Instead, for every country, they just took our trade deficit with that country and divided by the country's exports to us. So we have a $17.9 billion trade deficit with Indonesia. Its exports to us are $28 billion. 17.9 divided by 28 equals 64%, and they just halved it, 32%. So which Trump claims is a tariff rate Indonesia charges? Not true. So again, either Trump is lying about this or Trump doesn't understand tariffs. So the way Trump is looking at this is, if we have a trade deficit, that must be the tariff rate. Now, the other interesting thing is, he's saying all these countries are screwing over the United States. But what about all the countries with a trade surplus? All the countries that the United States have a trade surplus with, which includes Australia. Does that mean the United States is screwing over Australia? Of course it doesn't. That's not how trade deficits, trade surpluses work. A great example of this was someone pointing out that you have a trade deficit with Woolworths or Coles because you buy stuff from them and they take nothing from you. But you also have a massive trade surplus with whoever you work for, because they give you money and you probably buy nothing from them. Well, maybe you do buy a little, but I don't. And so trade surpluses and trade deficits are all around us. So it doesn't mean they're negative, doesn't mean they're positive. And the United States have massive trade deficits and massive trade surpluses with every country. So they have trade deficits, trade surpluses. It all depends. And the other thing, I've seen this only mentioned once. The United States has a massive, a huge, when it comes to services, a trade surplus because of Microsoft, Apple, Google, those sort of companies. And I have now heard that there is possibility that EU is going to target those companies. And you know that they're not going to be happy. Trump won't be happy. But you have to be consistent. If you're looking at, this is all goods, by the way, not services. This is all goods. You have to be consistent. If you're going to do that with goods, this with goods, you have to do it with services as well. Anyway, so that's how they calculated the reciprocal tariffs. Nothing to do with real tariffs, all to do with trade deficits, and it's just lunacy at its finest. So I'm sorry, Vin Healy, but there is no countries with 70% tariffs on USA goods. Maybe targeted tariffs, but there's nothing out there like that. And now USA has the highest tariffs in the world by far. Just have a look at this. So we're up to 10 to 25% proposed. So it's higher than that now. So yeah, we are in a trade war right now, and trade wars don't end good for anyone. Great example of that is 1930. It made the Great Depression worse. And I'm going to I've got two things to show you. US tariff. See if I can find it. Tariffs calculated. Where would it be? No. Yeah, look, Trump's tariff formula confounds the world. Confounds the world. How were Trump's new tariffs calculated? It will shock you. It shocked me. I'm trying to look for 9 News, the dubious way Trump calculated his tariffs. This information's it's out there. Trump's reciprocal tariffs looks to be a hoax. Here's how you can tell. I'm trying to find the official site. There's an official site. I forget what it's called. It's trade, calculated trade something or other. What is it called? Maybe I should do trade. it's funny because there are all these articles out there now, and when I did this last night, there was no articles, and that's why it was really easy to find. It wasn't this one, I don't think. There was actually a formula they used, and when he looked at the formula, it was definitely the White House. I'm forgetting what a government organization was, but when he looked at their formula, um, it looked really complicated, but when he dug down into it, it wasn't complicated, and it was directly related to trade deficits. So yeah, divided by trade deficits by the trade itself, and divide by 2. And that was the formula. So it looks really complicated, but it wasn't that complicated. And I really want to show you it because it's really interesting. And I wish, could it be this? I don't think it's this. Oh no, oh, it's the office of the. Um, no. Yeah. Anyway, it was something like that. Oh, maybe I should put formula. Yep, here. Well, the Wall Street Journal has it, and this is on an official site. This is So it looks really complicated, but it's not, because this epsilon or whatever you call these, it's 4 and 0.25, which cancels each other out. So all you're left with is these two numbers, xi and mi, and that is trade deficit. I forget what they are. They don't actually say what these are, but it's trade deficit. And here it is. Yeah, trade deficit. They use an example of China. Trade deficit, and then the imports. So 295 divided 439 equals 67%, and then they divide that by 2. So a really weird way for calculating tariffs. So it looks complicated, but it's not. And it's completely wrong. Completely wrong. Okay, so I did not stop at 20 minutes. So before we get to the ASX today, I'll take a break, grab a coffee, grab a snack, shoot some hoops, that sort of thing, and I'll be back in a second once I go through these ads. By the way, we are in the closing auction. Okay, I am back, and you'll notice that not much time has passed because I'm not stopping Bursley, but this is where I put some ads. What I should do is actually write down the time. So it's about 10 and 27 minutes. Yeah, where I put the ads. Anyway, we're in the closing auction. The trading week has almost come to an end, and XJO is down at 2.51%. What I might do is, the reason I've got NIB is I wanted to see if my position yesterday was down, and it's not down all that much, so I'm very happy. I was thinking very bad timing there. Anyway, so XJO down 2.4%. Have we finished the closing auction? Maybe. How much is CBA closed? Let's have a look. 1.52%. And yeah, we have finished the closing auction, which means I just want to see if XJO has finished up or down. Usually ComSec is the first one to shift or move. Anyway, we can move on. Anyway, so a pretty bad day for the market today, which is it was expected, because look at tech, 5.73% down. And the whole reason behind this was because of Wall Street. So NASDAQ down 5.41%, S&P 500 down 4.84%, Dow Jones down 3.98%, Russell 2000 down 6.59%. Russell 2000 is now in a bear market. That means down by more than 20%, or a crash. Dow Jones is getting close to a crash or a bear market, down 16%. And I discovered a new thing I can use, just a ruler here. Yep, so this is a NASDAQ down. No, that's the S&P 500 down only 12.2%, but the Russell 2000 is in a bear market. Yes, bear market. Russell 2000. Oh, it's not. There it goes. I was going to say it's not adjusting, but it is. Russell 2000 down 22.49%. So definitely in a bear market for that. And it just looks bad. It looks bad. Anyway, so that's the reason why we were down. And if you have a look at some of the individual companies on the NASDAQ and New York Stock Exchange, I'll show you the US. I do have a USA watch lists, 247 companies. It's just pandemonium over there. Shopify is no longer on the New York Stock Exchange. It's on the NASDAQ. PayPal down 8%. Atlassian down 11%. Amazon down 9%, Snowflake down 9%, Nvidia down 8%, Facebook down 9%, Apple down 9%, Target down 10%, Dick Smith Electrical, is Dick Smith Electrical? No, Sporting Goods, Electrical was here, Sporting Goods over there. It's not Dick Smith, it's just Dick's. Down 12.5%, so obviously people are now thinking less buying, less consumerism. Affirm down 18%. Under Armour down 19% almost. It's just horrific. Only a few Costco up, defensive, up 0.21%. So very few companies up, and some companies down a massive amount. Here's a company, Five Below, down 27.81%. I just want to see if they released anything alongside. Whoa. Currently a decrease of 26.57%, marking the largest percent decrease on record since data tracking began in July 2012. Is that just for this company? Oh yeah, it's just for this company. So it's the worst day on record for Five Below. Not even sure what they do. It's just, I'm shocked it's not even down by more. The indices are not down by more. A few companies are up, and I suppose those companies are up will benefit from increased tariffs. But if you just have a look at this list, very few companies are going to benefit from increased tariffs. And we can see in the proof here, the market is saying this is bad. Anyway, so that is why we had a pretty bad day, because I wouldn't say that easy fit in the United States, but increased uncertainty, pretty bad day. And let's just see if we are now officially closed. Yes. So slight drop in the closing auction, XJO down 2.44%. And we had a very slight rally early in the day. And I was thinking, because we were down about 1.9% just after open. And at one point when I did have a look, XJO was only down 1.4%. I think it was even down 1.3%. I was thinking, oh, this is exactly what happened yesterday. So maybe we'll only be down by less than 1% at the end of the day. But then by midday, it just fell. Consistent dropping in the XAO, XJO, and the tech just plunged down 6%, was it? 5.66%. So not a good day on the market. And this is legitimate. Because again, uncertainty. This is all about uncertainty. It's not about tariffs per se, but it's uncertainty, because there is this fear that if we do get a really sustained trade war, that is not going to be good. And the market doesn't like uncertainty. The market doesn't like risk, and that is the risk right now. Staples had a good day, understandable, highly defensive, and you would expect that Woolworths, Coles won't be affected all that much, because they're not really exporting anything to the United States, are they? And the other thing is, we're not doing any reciprocal tariffs at this point in time. And look at energy, down 8%. IT down 6.42%. So energy consists of coal, uranium, oil, gas, that sort of thing, maybe one or two others. Let's see who was bad performing in this particular sector. Oh, they're all bad. So Woodside down 8.7%. So I've been hearing a lot lately that Woodside, was so good value with Woodside, but I've been resistant just because of the chart. I think there might be some good value in Woodside, but the chart just looks horrendous. There's no reason to be buying Woodside just yet, and today sort of proves that. So a pretty bad day for Woodside. Santos down 8.9%. I would assume Beach Energy down 10.4%. It's funny, Korean Energy down 11.6%. So I did take a trading position in that one. That's gone against me. Uranium, NextGen's up. Boss Energy's up. So uranium's held their own today. So it looks looking like it's oil. And that's the other interesting thing. I wonder, let's go back to oil. And I'm just going to see if oil crushed. So typically in recessions, oil demand does decrease. It did go down a fair bit. Yeah, went down 5.8% yesterday. It's in my purple box. So this actually is a oil. I'm just going to put down oil on my little page here. It's in the purple box. So purple box is a support zone. It's been in play for a few years. Now, the only problem is if we do go in recession, there's a chance that oil will drop even further. But there's also a chance OPEC will say, we're going to limit supply of oil so the demand and supply levels out. And so I do think there is probably some, what do you call it, organizational support at these levels because of OPEC. Trump might want oil to fall further. I don't know. But anyway, so pretty bad day for oil. And what about copper? I'm just interested in copper because Dr. Copper, yeah, copper's just collapsed over the last few days. Down, what was it down yesterday? Down 4.21%. The other thing I should mention, silver down 9% yesterday. Oh, that was a big, 7.7%. That was a big shock for me. Gold down, but not like that. Yeah, so even gold suffered. So one of the most fascinating trading days I have seen are all indices down. In fact, the only index not down by more than 2% was gold. Funny enough, not gold. So relatively speaking, gold had a pretty good day. Should I have a look at the ASX 20? Down 2.33%. Woolworths is up. Is Coles in the ASX 20? I can't remember. I'm going to say Woolworths is up. Wesfarmers might be up. So let's have a look. 2 companies up. 5 up. There you go. So some people out there probably had a good day. So which companies were up today? Let's have a look. Coles, Woolworths, Transurban, which is defensive, Rio Tinto, and Telstra. I'd say Telstra is also defensive. I'd say Telstra's pretty highly defensive because no one's going to get rid of their internet and their phones. Yeah. So I actually can understand this. Coles and Woolworths, definitely. Flight to safety, flight to defensive. And yeah, Transurban as well. Rio Tinto, interesting. So I was completely wrong on that one. Okay, so let's turn attention to the top stocks of the day. Looking at the top gainers and top losers before we have a look at the top 5 stocks. And I think it's time for a break. So go have watch a video, maybe watch a new movie that's been released. I watched Last Breath about, what do you call it, the divers? What do you call it? Saturation divers, yes. And there was an accident in 2012 where a diver, he had his cord severed. So that cord was supplying him with oxygen and something else. I forget what's called, Helix or something like that. And he was out of oxygen for over 30 minutes, but he survived. So that has Woody Harrelson in it. Anyway, so that's a good movie. The Pit, pretty good medical movie, or not movie, TV show starring Noah Weil. And I just finished Paradise, which I found fascinating because I had no idea what the story is about. I knew it was about the murder of a president, and that's how it started. But then at the end of episode 1, it just a massive twist. I was like, whoa, what's happening here? Anyway, back to the video. Okay, so let's have a look at the top gainers today. And a company called Energy World Corporation up 30.77% on fairly low turnover. It'd be really good if you were a very concentrated investor and invested in some of these companies because you had a pretty good day. But most of these companies are fairly small. I'm looking for a pretty big company. Looks like Energy World was the biggest company here until we get to Ozquest. So all these companies up over 10%. So you can do well on these days, but most of these companies are fairly small. They're story stocks, that sort of thing. So let's have a look at top gains by market cap. So we're going to have Woolworths, Coles, De Grey Mining, Ansell, a nice little rebound after yesterday's debacle. They released a nice little tariff explainer saying how they're just going to put up prices. And it's really funny because what's his name? The Treasury. What's his name? Steve Bessent. I want to say Scott Bessent. Is it Scott Bessent? Steve Bessent. I forget which one it is. Scott Bessent. Yeah, the Secretary of the Treasury. He said, "Oh, there's a chance companies won't put up prices in response to tariffs." Well, who's being naive, Mr. Bessent? So here's a background as a fund manager, no background in business whatsoever. So yeah, companies are going to put up their prices. Yeah, he was saying maybe other countries can have a bit of a burden. They mind blowing. Anyway, I'm going a bit of a tangent. Anyway, so go back to top gainers. So that's why Ansell's up because they've clarified. Again, certainty. Yesterday was uncertain. Today is certainty. You're going to do this. I was trading Ansell. I got it today on this little bounce because following my rules. Let's have a look. Follow my rules. Share price fell below where I'm comfortable. You could also even say this is a trend killer. And I saw a little bounce today. I went, perfect time. In fact, I think I mentioned that yesterday. If I see a bounce, I'll just sell on that bounce. And I got a good enough bounce today to sell out of this position. And nice profit because I bought at $25.68 and sold above $30. So what's that? 20% profit? I'll take that. Although it's only in a year, so could have done better. Okay, what else do we have here? Capricorn Metals. Did they release anything? I didn't see anything from Capricorn. Because that's a pretty good day. No, nothing. So some coal companies look like they did fairly well. IPD Group up 3.13%. I don't remember them releasing anything. So, and the share price did drop a fair bit yesterday. So maybe this is just a bit of buying on the dip yesterday. Yeah, nothing. Yeah, the share price went down 7% yesterday. A fairly low volume though. Chart doesn't look good, so we don't have to look at the chart. Yeah, now let's have a look at the chart. Why not? So this is a company that I actually do own, but I'm not trading it. I was trading this, but I decided to hold shares in this company for the long term because I do think there's value. So I don't want to get rid of this company because the PE ratio is like really low. It's like below 13, no, below 14. And I do think there's potential growth and I do think it's cheap. So I'm going back to my value days. Very hesitant to sell something that I see really good value in, even if the chart looks horrible. And what else? Wagner's, of course, the B-Boz and B-Bus probably did really well today. Seven West Media. So what the market is thinking there is because there might be a recession, everyone's going to be staying in their homes, just watching TV, streaming instead of going out having fun. I suppose that's good. Watching more TV. There's B-Bus. COSOL. Haven't really been following COSOL lately because share price is, well, the chart looks pretty bad. Anyway, so I can move on to the top losers, and we're going to see a lot of companies here. Well, actually, we're going to see the same amount of companies, but bigger movements here. BSA. Interesting. They did release a trading update. I wanted to ignore this one. Okay, so only down 21.8% in ComSec. So there is a trading update. The market cap of this company is like 4 million, I think. 4 million via, according to that, 2.8 million according to market index. And when you release, or when you look at their trading update, you go, wow, this could be the cheapest company in the history of the world, and probably the cheapest company that will ever be in the next 5 million years. Because remember, this company has a market cap of 4 million according to ComSec, $2.8 million according to market index. But they expect EBITDA to be about 7 million and total cash flow to be in excess of 8 million. So what's going on here? Well, you have to know the story here. They were servicing NBN and they lost that contract, which was the vast majority of their revenue. So their revenue is going to plummet soon because they will be getting rid of that contract soon. Not getting rid of it, but they'll be stopping that contract soon. They probably don't even mention that in this. No, not even mentioning that in this. But yeah, don't always, you always need context, I suppose. And there's a bit of context to BSA, and share price is down a fair bit. So even though it looks like it's cheap, it's not really. I spent way too much time on COCL. MetaVisor down below 10 cents now. Amotiv in my top 5. I did mention that company, a trading update. So obviously that's the top 5. I'm looking for the other company that released a trading update. Enero. Maybe it's too small. No, it can't be. I was sure that company will be down heaps. Enero. Oh, 16%. It's not showing up here. 16%. What's the market cap? It's not there. Let's have a look by market cap. Breville down because of tariffs. MinRes down below $20. Life 360 down now 10%. By the way, I have sold out of Life 360. I did that I did that on Monday, I believe. I think I did mention Life 360. So Life 360, there it is. So I bought 11.39, 17.70 over last year. And if the share price fell below $20, I would sell. And it has. And no, $21. So it falls below $21, that's a sell. And it did that. So no longer trading Life 360. And follow your rules. Follow your rules. So if it turns around, I'll buy some more. HMC Capital keeps on dropping. This chart looks horrendous. This chart is ugly. Whew. Their results were initially in February, viewed by the market really favorable. That was on the 18th of February. Share price up 9.9%. Share price has halved since then. This chart is one of the worst charts. This is completely oversold. And we know this just by looking at the RSI. And it's been oversold for a while. Yeah, it's been oversold since the start of March, the 10th of March. It's been oversold. So just because something is oversold doesn't mean it's going to bounce. This is a really good example. And this is another case of a trend killer. And that trend killer, there was hints of it back in December, but definitely on the 16th of December, share price dropped 13.66% in one day. That was a trend killer. And compared with what the share price has done since then. So I should put this in my trend killer list. I want to get rid of you, RSI. Trend killer. Where is it? Here it is. And add HMC. Okay, I could keep going on. I could keep on going on. Corporate travel management. People think less traveling. Business is going to do less traveling. Zip down 14.4. Affirm was down massively in America overnight. Digico infrastructure. HMC spun out Digico infrastructure. Amotiv, yeah, Bravura, Credit Corp, Develop Global. Geez, it's just carnage. Carnage. Okay, so let's get to the top 5 stocks of the day. Funny enough, when I went through the announcements, I had a minus, like a positive and a negative column. So I put all the companies I might want to talk about in the top 5 stocks into those different columns. 3 negative, but I did have 6 positive or possible positives. And then I went through how the companies performed, share price, and a few of them actually did perform well. WT Financial up 4.35%. It did not make it in my top 5 because I wasn't sure about this announcement. I wasn't sure if it was that positive, but share price up. What else was there? Mesoblast, I thought their announcement might have been okay, not subject to US tariffs. Market didn't care. I even thought BSA might have been positive. And then Ansell, positive. And there was also 2 other companies which I will discuss in the top 5 stocks. But there were 3 companies in the negative column, and all 3 companies made it in top 5. And so let's talk about the first one of those, which is Magellan Financial released their assets under management. Share price down 6%. I think a lot of that is just negative sentiment in the overall market. But their assets under management is really important. Something I look at every single month, and I'm waiting to see when this company can experience some inflows, not outflows. It looked like they were getting to that point not that long ago, but it's gone back into the negative. So net outflows of 6.6 billion. So it's very important here. Don't look at the total AUM. Look at the net outflows. So the total AUM will be dependent on how the market goes. So sometimes you'll see that rise, but you'll still see outflows. Sometimes you'll see total AUM actually drop, but in fact, the company or the fund manager will see inflows. So it's very important to look at the outflows and inflows for these type of companies, not at the total AUM. So what I'm looking for here is inflows, and we're not seeing it just yet with Magellan. And I think the share price would have dropped regardless of the overall market. So let's have a look at the chart. I had this on my watch list not that long ago because it did get to $8. And I thought $8 was a good level for Magellan. It's been a good level since early 2024, but the share price dropped through that fairly easily. It did test it. The reason I say it tested it, you can see it drop through, and there was a small little rally, and the share price got back up to $8, and since that test, it's just plummeted. And so down to $7, and the next level I'd be looking at is around about $6. That was the lows back in October 2023. In fact, I might put a line there so I can see it coming up. So that would be another support level. So Magellan's chart looks horrendous. And this is another, well, there was a couple here, possible trend killers. 6th of December, and then the real trend killer was the 30th of January. You can see it. Good uptrend, bad day, share price plunged. Okay, so that's Magellan. Coming in number 5. Coming number 4 is a company we were waiting on FDA clearance, and they received it. Maybe the worst day to release it. Orthocell, share price down. Wow. Wow, wow, wow. I did not expect that. I actually expected it to be up. I will be honest. I thought maybe up 3 to 5%, not down 2%. That is so interesting. So this is telling me that the market thought this was going to happen. The market had already priced it in. Clearance, Rempla cleared to commence sales in US market. The next thing I need to see for Orthocell is how much money they're going to get from selling Rempla in the United States. I don't know. This has happened to me in the past where I just didn't know and wasn't following the company too closely. Telix, and when I saw the amount of money they were getting from selling their first product, Illuccix, isn't it? Yep. It just blew my mind, and I just went, I have to take a position in that company. So that's Telix, that's 666. Sure, the share price is dropping now because overall market, but that's the next step for me when it comes to Orthocell. So they have received clearance, and they also have released an investor presentation, which I'll have a look at later in the video. Not the video, later in the day when I won't be recording. Okay, so but the other thing I should mention here is in the trading halt they released yesterday, and there are a few people who, particularly newer investors, who don't understand a trading halt. So they do mention a date here, Monday, 7th of April, 2025. Doesn't mean that's when they will release the announcement. They can release it any time before they go into trading halt. And if they don't release it by that date, when trading begins on that date, they have to go into suspension. So there's a little bit of time they can release the announcement before they go into suspension. So that's not the date you have to look at when they will release the announcement. It's just they have to release it by then. Otherwise, they go into suspension. So they can release it any second. I do know there are some particularly new investors who don't realize that. So they get caught out. Now, to be honest with you, I'm not waiting for the announcement, but it just popped up before opening today, which is the best timing. Because if they release it after opening, I'm going to miss it. Okay, so that's Orthocell. And by the way, the chart doesn't look bad. Now, I did buy some shares in Orthocell because of this, and I suppose I'm part of the market. And I thought there was a really good chance they will receive FDA clearance, and that's why I bought. And the reason I bought is I thought, oh, the share price will probably go up after they get clearance, and I expected a little bit more than this. I'll be honest with you, a little bit more than this. And I think it's just the overall sentiment in the market. Coming in at number 3, we have Pacific Edge. I don't really know how to read this one. I just wanted to choose a company that had a pretty good day. Pacific Edge up 4.17%, yeah. And they released Q4 25 CX bladder volumes rise and key metrics improved. It sounds good. Rising, volumes rising, and key metrics improved. I opened it up and I went, I don't know. It hasn't got what I like. I like to see numbers, like financial numbers, like cash flow or profit or something like that. This is just numbers or volumes. So, for instance, today announces test process laboratories improved 6.8%. Total laboratory throughput rose to 7,577 from 7,092, etc., etc. So I am more, maybe because I'm uncouth and lacking in culture, I like numbers. I like money numbers, not volume rises. But anyway, I thought this could be quite positive because it sounds positive, and the market agrees. Share price up 4.17%. And this company has released a few positive announcements lately. So they released the CX bladder incorporated into AUA clinical guideline after releasing numerous really bad announcements over the past 2 years. And that's why in the chart, you'll see the share price of this company plunging because they lost, what was it, Medicaid or something? They lost that. Oh, that's the wrong one. This is not, I'm not talking about Petalbrook Hotel Trust. Sometimes I have to look to see where the company is. So that's why, yeah, we saw a massive dive in the share price. This was back in early 2023. And since then, share price has gone sideways. So it does look like the share price wants to rally. The best way I think the share price can rally from here is good financial numbers, profitability, operating cash flow positive, free cash flow positive. That's the best way to get the share price to rally, because that's the most important inflection point for every company that has ever existed. I'm going to say that again. The most important inflection point for every company that has ever existed has been becoming profitable or generating free cash flow, because there's many companies who never reached that point and they went bye-bye. And every company that has reached that point and has gotten bigger, that was the point. That was the point you can say, this is a real company. Because after they get to that point, when they're able to generate cash flow, they don't have to go back to the market or go back to their daddy or mummy or their rich relatives to ask for more money or ask for donors, that sort of thing. They can generate growth through their own company, through the cash flow. So that's why cash flow is really important, because it's self-sustaining. That means a company is self-sustaining. They're a real business. So that's why I always look for companies that are getting to that point, because it's the most important point for every company that has ever existed. I'll say that time and time again, ever existed. It's every single management, every single company should be aiming for that. And if they got to that point, then it becomes capital allocation. What do we do with that cash flow? And there is also an argument that it's different. You need different sort of management styles. Ooh, I completely forgot about another break. So go for another break as I go to the next company, which will be, who knows? You'll have to come back and find out. Okay, I am back now, and coming in at number 2, we have one of the 2 companies that did release a trading update. So you know who the final 2 companies are. I'm going to see which company had the worst day. So Amotiv down 16.72%. Enero down. Oh, Enero, you coming in at number 2. Amotiv, you come in at number 1. So Enero Group, they saw some sort of advertising marketing company. They also had this really good tech that I forget what it was called. I'm trying to remember. This was the growth part of the business maybe 3 years ago, and something bad happened, and they sort of lost that, or maybe they saw. I can't remember exactly what happened. I don't follow this company all too closely, but not the best quality company. I think pretty sure it was software, something to do with software, and so that actually did pique my interest just a little bit. But then you'll see by the chart, yeah, no interest at all. Trading update. So again, advertising and marketing. Now, one of the things, maybe the main thing, companies will pull back from when they are, or when we're in times of uncertainty, is they'll pull back on their advertising and marketing spending. I'm pretty sure that's an absolute truth. I'm not making that up, am I? I'm pretty sure I'm not making it up. Advertising and marketing. No, I'm not going to do that. I was going to Google it. Anyway, so there was a company called WOW Media whose chart looks pretty good, right? So OML. I thought this chart looks pretty good. They did release something positive not that long ago, 24th of February, so it must have been results. And I was thinking, oh, the chart looks pretty good, but I was thinking at the same time, no, if by chance we do have some tough economic times, WOW Media is not the sort of company you want to be owning, even if you're trading. So I decided to hold back, and really share price has done nothing since then, so no loss either way. Okay, so let's go back to Enero. So I'm pretty sure they're marketing and advertising. Let me just confirm that. About Enero, specialized or specialist portfolio of marketing, technology, and communications business, listed on the ASX. I'm trying to remember what this thing was called. Was it OB Media? I have a feeling it was OB Media. Anyway, so they released a bit of an update, and it was not good. I saw this update in my live video, and yeah, it did not sound good. So a net revenue. So this is financial year 25, ending 30th of June 2025. They expect revenue to be down between 10 and 12%. EBITDA to be down between 30 and 40% from last year. So straight away, that does not sound positive. OB Media have been impacted by a recent decision by Google to shift the industry towards its newer related search on content. So it does not sound good. Yeah. So not a good announcement from Enero at all. So let's have a look at chart. And the reason I go through trading updates is I'm looking for, actually, in fact, initially I was looking for a breakout. So company, maybe share price going sideways, and then I see the share price rise on nice volume after a trading update, share price at a 3-month, preferably 6-month or even 1-year high breakout. But also now what I'm looking for are trend killers. Share price in a downtrend. Company releases something that's positive, surprises the market, share price pops up. A nice solid green candlestick. And that's the reason I bought APA Group and NHF is because of those trend killer events. So these trading updates from Enero and Amotiv, that is what I was hoping for. Some sort of good trading update. Unfortunately, we got the opposite. So Enero's chart. So yeah, down. What can you say about this chart? It's ugly. Share price of this company back in 2021-22 got to $4.20, and I'm pretty sure that was on the back of that technology. I can't remember what happened, and that's why the share price was on a beautiful tear before then, beautiful run before then. Share price now at 65 cents. We're talking about COVID-19 lows. In fact, it's gone below that. Yes, the share price of Enero is now below COVID-19 lows, and this chart looks horrible. Now, I would say that eventually there's a chance the share price and the sentiment in this company will turn positive. And that is why I will continue to follow this one, not closely, but I'll just continue to have a look in the chart for Enero. Now, if it doesn't turn positive, then there's no loss. And that's why it is better to trade non-high quality companies or low quality companies, because sometimes they just go out of business. I'm not saying it's going to happen to Enero, but I'm saying it can happen. Okay, so Amotiv, and I'm sure this used to be called GUD Holdings. I'm going to confirm that. Yep, formerly GUD Holdings. I do like Market Index because in the snapshot section, they will say if a company has changed their name, and Amotiv has done that. Not sure why. Amotiv. Anyway, they also released a trading update and outlook. And obviously, the market didn't like it. Share price down was at 16.72%. And I can't remember this one. I remembered Enero, but I can't remember this one much. Okay, so the group now expects marginal revenue growth and a marginal decline in underlying EBITDA compared to previous corresponding period. Reseller demand remains muted. No rebound evident to date. US remains strong, which I think it might change. Four-wheel drive impacted by weaker new car sales in Australia. Pickup sales down 12% in January, 21% in February, and timing of South Africa production mix. Trends across RV, caravan, truck remains soft. Group outlook. Yeah, nothing too exciting there. Even if when they say balance sheet remains strong, yeah, okay, fine. Doesn't really impact me right now or the market. And US tariff update, we're not expecting the US tariffs announced yesterday to have material impact on the group. Okay, so the market didn't like it, and I can understand why, because weak commentary, I'd say, bearish commentary in the first bit. Talking about weaker than new car sales, decline in underlying EBITDA, reseller demand remains muted, no rebound evident to date. So fairly negative sentiment right there. So I can definitely understand why the share price is down. So let's have a look at the chart for Amotiv. By the way, I at one point did trade GUD Holdings, so I don't consider this company to be high quality. And just have a look at the chart. This is a weekly chart. Not much increase. In fact, the share price now at 732 is the same level the share price was back in 2004. So 20-year period share price has done nothing. Well, it's not exactly true, but anyway. Interesting in saying all that. So this is the weekly chart. Go back to the weekly, Michael. So this is sometimes why I do like having a look at both weekly and daily. Have a look at the last 3 lows. So this includes COVID-19 low and also the June, October 22 low. So they all almost the same level as where the share price is right now. So this could be, just saying, it could be a good trading buy, just where the share price is right now. But if you look at the daily chart, Yeah, look at that. Collapse in the share price. Ooh, it looks ugly, doesn't it? Okay, so that's all I've got for the stocks of the day. I'm already over 1 hour into this video, so I probably should stop it there. There's an interesting, I just wanted to look at one. There was one interesting, here it is. Forest Hill 8462 says, this is in regards to Incitec Pivot changing the name to Dyno Nobel. And as soon as Forest Hill 8462 wrote this, and Nobel, hence the name, Dyno Nobel, D-N-L, I really like this name now. So dynamite, Dyno Nobel. So I just saw Dyno, that's dynamite, and it did not hit me at all that Nobel is, this is not according to Forest Hill, this is the truth. And Nobel because Alfred Nobel invented dynamite, and I knew that. It didn't click in my mind. So thank you, Forest Hill, for pointing that out. Okay, that's all I have for this video today. If you have any questions, any thoughts, leave those in the comments section of this video. Also, I'd like your feedback in regards to going live. Anyway, so have a good day, have a good weekend, and don't panic. Don't panic. Hitchhiker's Guide in the Galaxy. Yeah, don't panic. I'll give you a book, what to do. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.